Hi everyone, this is Dr. Nitin Choda and welcome to this episode of Ignition Time. Thank you so much for being a viewer. Thank you so much for being a subscriber. I want you to know that you're greatly appreciated. The Ignition Time channel is designed to get you to the next level. This channel is about us coming together as Americans, us understanding how the country works, by extension, how the economy works, and then by extension, how to manage your money. What matters to me is that we come together. This channel is not about the red or the blue, it's about the red, white, and blue. I'm not Democrat, I'm not Republican, I'm American. And in this video, I'm going to focus on things that are important to help you manage your own money. I think understanding how we manage our money is very crucial because it's the skill that will help us get to the next level. So in this video, we've taken some important segments from the Managing Your Money playlist. By the way, we'll provide you with a link to all our playlists in the description section below, so check them out. But we have different playlists on our channel. We have playlists on politics. We have playlists on announcements from the administration. We have a playlist called Economic Recovery Alerts. We have a playlist called New Career Opportunities to help you hopefully figure out a new direction in your career. We have a playlist on stimulus news. We have a playlist on unemployment benefits. Another playlist specifically on managing your money, and finally a playlist on financial freedom. In this video, let's take a look at some important clips, a collage, if you will, of how you can manage your money based on all the videos I've done over the past several months on our channel. Thank you so much for participating in the growth of our channel. And I want you to know that we'll continue to work hard for you. Let's just jump right into some important nuggets on how you can manage your own money. Let's roll the tape.
If you're going to be getting mortgage forbearance, you fundamentally have three options. Option one, pay off a lump sum at the end of the forbearance period, which by the way is not practical and it's not something I would recommend you do, but that's an option that the lenders are going to try and offer you because they want to try and get their money back from you as soon as possible. The second option that you have is to pay off the amount that you owe in installments, and the third option that you have is to have that amount essentially added to the end of the loan, effectively extending the life of the loan. So let's say you have a 30-year loan and you're 5 years into the loan and now you get forbearance for 6 months. Your loan is now 30 years and 6 months. So you pick up 6 months later and then you continue paying with tomorrow's dollars, which by the way is a preferred option because with the effect of inflation, tomorrow's dollars are weaker than today's dollars. Let's take a look at a chart which shows you the GDP growth of the United States over the past few years. So what is the GDP or the gross domestic product? The gross domestic product is a monetary measure. It's a financial metric of the market value of all the final goods and services that have been produced in a specific time period. In short, the greater the number of transactions and the greater the size of the transactions, the higher the GDP. If people are buying more cars, more expensive cars, if people are buying more homes, more expensive homes, if people are buying more televisions, more phones, more computers, if people are eating out more, then the GDP is higher. The higher the GDP, the greater the growth of the economy, the greater the expansion of the country. Now, GDP is governed by buyers and sellers. A buyer usually uses cash and credit to buy something from a seller who usually sells either goods, whether it's food, whether it's any other kind of item that you would buy, stuff that you would buy online. They sell services. Let's say you get someone to fix stuff in your house, or you get some sort of a service, like you go get your hair cut, that's considered a service. Or a seller could also provide what's called as a financial instrument, which could be stocks or bonds or even real estate. The first thing I'm going to teach you is how to prepare for a negotiation with your creditor. Number two, I'm going to teach you how to be ready for the risks involved with that negotiation. Number three, I'm going to teach you how to lower your rent by renegotiating with your landlord. Number four, I'm going to teach you how to lower your credit card payment by talking with your creditor in a way where they can lower your payment. And number five, I'm going to teach you how to lower your auto loan. Now let's talk about some of the job losses. If you look at your screen right here, the number of jobs lost during the Great Recession, we're talking about the 2008-2009 recession, was about 8.7 million jobs, and it took several years to recover those jobs. So the number of jobs created after the Great Recession was 22.4 million jobs. However, the number of unemployed insurance claims in the last 7 weeks, and this is from the Department of Labor and this came from CNBC, was 33.5 million, and these numbers are only going to increase. How not to invest in the stock market during this crisis. Now, the stock market was at all-time highs November, December, January, February. The Dow Jones Industrial Average was hovering right around 29,500. A lot of stocks were at all-time highs. Anyone and everyone that you knew that was in stocks was making money. Everything was going up and up and up, and then the party ended right around February and March. In fact, on the 23rd of March, the Dow Jones Industrial Average fell as low as 18,591. Now, when you think about the drop from 29,500 to 18,591, you're looking at a 38% drop in the stock market in a matter of weeks. A 38% drop. That means if you had $100,000, it came down to an average of $62,000. There's a reason they say you can't avoid death and taxes, despite the fact that a lot of us are on unemployment, despite the fact that a lot of us have to work remotely and probably will continue working remotely for the foreseeable future. The IRS is going to want some portion of your income as taxes. That's just the way things are. In fact, there's a lot of variation between different states when it comes to taxation. Our government consists of a central government, which essentially collects money, which spends money, which sets policy, which sets up coordination with foreign governments, and a central bank. The job of the central bank originally, when they were set up, was to control the amount of cash in the economy and was to control credit in the economy. Now, the Federal Reserve, which is the central bank, they do that by printing money, they do that by controlling interest rates. But over the years, the job of the Federal Reserve has actually evolved. So again, the Federal Reserve, also known as the Fed or the Central Bank of the United States, they were actually created back in December of 1913. And the primary mandate of the Fed was to maximize employment, stabilize prices, and moderate long-term interest rates. Now, over the years, there have been many crises. As you probably know, there was a Great Depression in the 1930s, which was really the first big problem that the Fed had to deal with. More recently, we had 9/11, and then we had the mortgage subprime crisis in 2008, and now in 2020 we have the pandemic crisis. I'm going to give you some basic fundamental economics here so that we can then establish a case for what I'm about to say. Now, in the previous video, I talked about the importance of having cash and credit to make purchases. I talked about the fact that the more transactions there are in an economy, the more the economy can grow. And a lot of this really works on cash and credit, and that's what the US Federal Reserve is responsible for. The United States Federal Reserve, which is the Fed or the Central Bank of the United States, basically controls the amount of cash and credit in the economy. I'm going to go over 5 things that you can do if you're out of work and if you have bills that are piling up. The first thing, make sure that you're applying for all available benefits, and this includes unemployment from your state. I'll talk about this in a little bit more detail in a minute. Number 2, make a budget and get rid of all unnecessary expenses. Only focus on the bare essentials that you absolutely need in your day-to-day life. Number 3, get in touch with all your creditors. This could be credit card companies, this could be your mortgage company, your auto loans. Get in touch with all of them so that you can start to explore available options for relief. Number 4, protect your identity, because identity theft is a major problem that's starting to emerge now. Several thousand websites have been set up by scammers trying to get your information and trying to intercept your stimulus checks and maybe even get unemployment benefits in your name. So you need to be very careful about that, and I'll go over several suggestions for you about that. And the 5th point is tap into IRAs or credit cards as a last resort. You'll have to tap into those savings if you have run out of options. Is my financial health in order? So in this training video, I'm going to talk about 3 things that you need to be careful about so that you can answer the question, is my financial health in order? So the 3 things that you need to ask yourself are, do I have smart debt? Number 2, can I practice simple living? And number 3, do I have a financial buffer? So it's smart debt, simple living, and financial buffer. Let's get into each of those points. There are 2 kinds of debt. There's good debt and bad debt. Good debt is debt that allows you to have a better future, that's good for your future. For example, having a mortgage, in my opinion, is an example of good debt because you're building ownership, you're building equity. It gives you a psychological sense of satisfaction that you're owning something, and it is something that over a period of time can build you an asset. It has a lot of tax advantages as well. Let's say you put $100 into a bank account. After a year, you would have a little less than $100. That's actually what negative interest rates mean. Now, if you're thinking, that's ridiculous. Well, there are actually 5 countries in the world that have negative interest rates at the moment. These countries are Switzerland, Denmark, Japan, Sweden, and Spain. Now, I'll talk about what these countries did and why they did it in just a couple of minutes, but what's the impact for us here in the United States? The things that get us into trouble are living beyond our means, not having a long-term financial plan, and number 3, getting into too much bad debt. I really want you to escape the cycle of bad debt. Now, I do believe that some debt is good. I myself own many rental properties all over the world, and a lot of them are leveraged. I have very low interest loans on those rental properties, and they are paid off by tenants. But then that's an example of good debt. An example of bad debt would be if you have credit card debt, where let's say you're paying more than 8%, 10%, 15% interest on the money that you owe to the credit card company. That is bad debt. That is a kind of debt that will financially cripple you and that you'll find hard to get out of, and that is the kind of debt you need to get out of very quickly. What $1 trillion actually looks like. This on your screen right now is a $100 bill. We're all familiar with a $100 bill. Now let's take 100 of those bills, and this right here is a stack of $100 bills, which is about half an inch thick, which is about $10,000. I mean, it's walking around money. I'm sure you and I just walk around with $10,000 in our pocket, don't we? Now, what if we took this stack of $10,000 bills, and what if we multiplied that by 100? Then what would you get? You would get this stack right here, which is $1 million. Now, I want you to think about this. $1 million in a stack of $100 bills is the kind of money that would fit into a really small purse, if you will. It could fit into a bag that you can put your laptop in. You could easily fit $1 million in $100 bills into a backpack. So again, that's just carrying around money for you and me, I'm sure.
Thank you so much for watching, everybody. My name is Dr. Nitin Chhoda with Ignition Time. I want you to know that I appreciate you. The Ignition Time channel is like one big party. What I mean to say is we are a strong community. My goal is to bring you the truth wherever it might lead us. My name is Dr. Nitin Chhoda with Ignition Time. This is some information about me. You learn more about who I am, what my journey has been like, and why you should listen to me. I invite you to become a part of our community. The Ignition Time channel is about the country, it's about the economy, and it's about your money. It doesn't matter to me whether you're pro-Trump or anti-Trump, pro-Biden or anti-Biden. For me, it's not about the red or the blue, it's about the red, white, and blue. I'm not a Democrat, I'm not a Republican, I'm an American first. We are all Americans first. I want to welcome you to our channel. On the Ignition Time channel, my goal is to educate you about money. So it's raining money. So it's constantly raining money, and we're constantly in a party mode, and we're constantly in a confetti mode, and I want us to be happy. I know a lot of us are dancing. No, but jokes aside, if you learn something new from this channel, please click like, please subscribe, please enable notifications. I would greatly appreciate that. Keep in mind that we release videos at 2 p.m. East Coast time most days of the week. That's 2 p.m. East Coast time. You can get on our SMS alerts list. All I ask you to do is simply get your cell phone out, send a text message with the word ignition or with the word time to 70,000. That's 70000, and you'll get added to SMS alerts list moving forward. Now, you'll get important news, you'll get breaking news, you'll get important alerts, and you can opt out of these alerts at any time. If we release any kind of a training program, you'll be the first to get notified because these training programs will be extremely limited. You can opt out of the SMSs at any point in time. No concerns about that. You can also get on our email list. Simply go to ignitiontime.com/alerts. ignitiontime.com/alerts. You'll become a part of our VIP insider community. Again, by either sending a text message or by going to ignitiontime.com/alerts. That's ignitiontime.com/alerts. And you can then become a part of our VIP community. And you can opt out of the VIP community by email or by SMS at any point in time that you want. Now, one of the things I'm especially proud about as far as our community is concerned is how bipartisan we are, how intelligent, how respectful we are, and the fact that we engage in healthy debates in our community section. In the comment section below, there's a communities tab on our channel. So definitely comment below and become a part of our growing community. I've already seen many friendships formed in our community, which is amazing to see. Please share this video with 2 friends or family members, just 2 friends or family members. That would mean a lot to me. If you learn something new, please give me a like. Please give me a like. And also, if you're not a member of our community yet, just click subscribe and then enable notifications, and then you'll become a part of our growing community. I have a crystal ball, as you can see, and basically I make predictions about what's likely to happen with the country, with the economy, and with your money. I want you to be happy. Like I said, I want you to be in a party mode. I don't want you to be angry. I don't want you to be upset. I want you to smash the like button, but don't do it in a way that don't do it in a way that smashes the screen. Join us, become a part of our growing community. As always, you'll find a link in the description section below to all our resources. So this way you can dig deeper into the content that we release. So definitely check out the description section of our video. You can follow us on Instagram. Simply follow us on Instagram at ignition_time. That's our Instagram handle. That's ignition_time. You'll get exclusive news and content from us on Instagram. Now, you can also follow us on Twitter. Our Twitter handle is also ignition_time. That's ignition_time. So make sure you follow us on Twitter to get breaking news and alerts. Now, finally, YouTube does not always send out notifications on time. Such is technology. So all I ask you to do is simply bookmark youtube.com/ignition time. That's youtube.com/ignition time. And then you'll be able to visit the homepage of our channel and watch our videos at any point in time that you want. Thank you so much for watching. One last time, please click like, please subscribe, please enable notifications. I'm looking forward to seeing you in the next episode of Ignition Time. Thank you. Bye.